All right, we'll go ahead and get started. So this is Chris Berry with Castle Wealth Group, certified LO attorney, certified financial planner. And we do these regular Wednesday wisdom workshops. We're off a couple weeks with some stuff going on, some travel, continued education, but we're back at it now. I always like to start with a positive focus, just something positive that's happened, a lot of times personally or professionally. Uh, Personally, my kids are now 14 and 11. My son just started high school, and we attended a couple of his marching band events. So that was pretty cool. And now my Fridays for the next couple months are going to be filled with watching high school football and marching band. So that's kind of fun. Then my daughter has two soccer games coming up this weekend that I coach. So that should be fun. But we do these webinars, try to do them every Wednesday. And really, all it is a time to come in and answer any questions that have been submitted. And if you do have any questions or anything top of mind from a legal, financial, or tax planning standpoint, feel free to put it in the Q&A. I have a couple questions already submitted, so I'll get into that. Let me share my screen real quick, pull them up. All right. And so the first question here, what is the difference between title and a deed in real estate transactions, and how do each affect ownership and property rights? So the question is, what's the difference between a title and a deed? Basically, it's the same thing. So your title is your deed. That shows that you own the property. And when you purchase property, a lot of times you'll get like title insurance to make sure that there's a clean title, meaning clean. Each deed that was recorded is transferring full ownership. Sometimes there can be quirky things with easements and that type of thing. But in terms of estate planning, a lot of times we're doing deeds, and there's different types of deeds that we do to make sure that the home or the real estate avoids probate. So a lot of times we'll do what's called a ladybird deed, which is a type of deed that says it's in your name while you're alive and well. And then if you were to pass away, it avoids probate and goes to whoever you've listed on that deed. So it ends up being like almost like a beneficiary designation for real estate. And it's named after Lady Bird Johnson. So we do a lot of ladybird deeds. And what that is doing is transferring title, keeping it in your name, and then upon death, the deed says ownership is going to go to that new person. So essentially, a deed and title, basically the same thing. So hopefully that was helpful. All right, now let's get into the second question. And again, if you do have any questions, feel free to put it in Q&A. I have about 3 today. Second question. I am reaching out, highlight this. I am reaching out to seek your advice regarding retirement planning for someone who is about to turn 60 and has not yet started saving for retirement. I'm particularly interested in understanding the best strategies, catch up on savings, and hoping to ensure financial stability in retirement. Specifically, I would like to know what are the most effective ways to begin saving for retirement at this stage in life, and are there any specific investment strategies or financial products that you would recommend? Um, so we're 60, we don't have a lot of savings at this point. The biggest thing is accumulation. So even if you're age 60, you got to figure out when is going to be retirement age. And one of the keys is figuring out how are you going to recreate the income. So I would suggest figuring out what your monthly expenses are, and then looking at things like Social Security. When are you going to time Social Security? Typically, we recommend waiting a little bit longer to take Social Security. You could take it as early as 62 or as late as 70. Each year you wait, typically your monthly amount will go up. But if we're at age 60 and we don't have a lot saved for retirement, then the biggest thing is going to be saving, accumulating. And one of the best ways to do this, whether you're age 60 or 30, is to really automate it so that before you even get into like you're spending cash, you're stocking money away on an automatic basis into like a high yield savings account, or if you have a longer time horizon, into investments. And really, in terms of which financial tool I'd recommend, we'd have to take a step back and first figure out what are your goals and then develop the best strategy. And a lot of times in terms of investments, we're looking at time horizons. So when do we think we're going to need the money? So for age 60 and we don't think we're going to retire or start pulling from these accounts until age 70, that gives us a longer time horizon versus if you're trying to retire at 62, flip on Social Security and start drawing, then we'd want to look at something more conservative. But yeah, the biggest thing is just trying to save more. And you can look at cutting expenses, creating a budget, or really one of the best ways to automate it is, or the best ways to do it that's the least painful is to just automate like a automatic savings going out each week or each paycheck so that you don't even really see it in your account. Because if sometimes people look at it as, oh, I have X amount of dollars and now they go and spend more. But if that money already comes out, goes into an investment that you're not necessarily watching every day, then it's kind of out of mind. And then all of a sudden you get compounding interest and it starts to grow. So hopefully that was helpful. I don't have like a specific investment product or tool or portfolio to recommend just because I wouldn't know. I need no time horizons to make any type of investment recommendations, more about what your goals are. But big picture, the biggest thing is just trying to automatic any savings that you can. And then the second thing would be looking at when do you plan on using those savings? If it's in the short term, you might want to look at like high yield savings accounts, or we have some investments that are liquid and generating a conservative rate of return. If it's more long term, then I would look to more equities and something more aggressive. So, all right. And then let me get into my last question here. Can you please discuss the pros and cons of an LLC? What is the difference between an LLC and a regular company? So this is getting into business structures, and we set up a lot of business structures, especially for our clients that have pieces of real estate or consulting businesses. We have a lot of engineers that retire, but then they kind of have a consulting side gig, or we have a lot of clients that have hunting properties or rentals. And so a lot of times we're putting them into a business interest. And almost always on our end, just with who we're working with, we're almost always using a LLC, a limited liability company. It's a newer form of business structure, but it offers the most flexibility, and it's the easiest set up and has the least amount of cost, and it's easiest and most flexible from a tax perspective as well. So there's different types of business entities. You could have a DBA, doing business as. That's not really a business entity. That's not protecting any type of liability. You could have a corporation. Typically, we're not setting up corporations because for that to make sense, because you have certain reporting requirements and things like that, a lot more hurdles to jump through, more complicated from a tax perspective. That would be for bigger companies. You can have a S corp, and S corps are pretty flexible, just like an LLC. That's another option, but there are more requirements for a S corp than there are LLC. Again, LLC, hence limited liability company. So if you have a rental and there's a slip and fall, they can only take what's inside of that LLC, which would be the rental. They can't take your personal assets. And then the nice thing about an LLC is it gives you flexibility in terms of tax structure. So this is more of a CPA conversation, but unless you get to a certain level of revenue, it's probably going to make sense for that LLC to pay taxes in a pass-through nature. But if you have employees or if you get to a certain level of revenue, then you might want that LLC taxed at as a S corp. But yeah, in our office, we're typically setting up LLCs because these aren't like multi-million-dollar companies that we're setting up. A lot of times it's for real estate or consulting or one-person LLCs. So to figure out what makes the most sense, it would, again, it's like goal strategy tools. So what are you trying to accomplish? Are you just starting up a startup? Then you're probably going to look at LLC. Are you trying to limit liability? Then you're looking at one of those business structures, certainly not a DBA. But this is where you're going to want to work with an attorney and a CPA, someone who knows what they're doing from a tax perspective, and then also knows what they're doing from a legal perspective. Because if you only talk to, and that's the nice thing about our firm is we do legal, financial, and tax planning all under one roof. So we're bringing all these pieces together. But if you just talk to an attorney, he might tell you one thing. If you just talk to an accountant, he or she might tell you something else because there's a different focus. The CPA is typically just looking at it from a tax standpoint. The attorney's looking at it more from a liability standpoint. But I would say as a general rule, the default would be, especially if you're starting something up new and you're expecting some type of revenue coming in, I would structure it as a LLC, limited liability company, on a regular. That's generally the best option. But again, it really depends on your situation. And then if it's like a professional company, like our firm is a PLLC, so it stands for Professional Limited Liability Company. So there's a couple like little exceptions or offshoots of those. But as a general rule, we're looking at a LLC. If you're just starting a small business, a consulting business, or if you have rentals or even second pieces of property, we're using that LLC to limit the liability. And then you can make choices of how you want that to be taxed. So, okay, well, that is all I have. Again, we're going to get back to doing these on a regular basis. I apologize for the breaks that we have, but yeah, every Wednesday moving forward, we're going to be doing these. So if you do have questions, feel free to email them over and I'll address them as we go. And then also moving forward, I'll have some other topics that I'll bring up, especially as we're getting into election time. I don't know if you've heard that presidential elections are coming up. But there'll probably be some other topics, even if I don't have a question on it, that I plan on covering. So with that, thank you, everyone. Make it great.